alternatives, and unfortunately the alternative is dire, Chair, because the alternative then talks about misinformation and disinformation, because then they will have to go to platforms that don't necessarily have the rigor that the SABC has from an editorial perspective to actually get that information and education. So this is a very critical point that is at the moment that is facing the SABC. And I'm just going to skip because I know you've seen all of this in terms of strategic programs. I'm going to get into just the performance, which is very critical. What we are saying, Chair, is that even though the SABC is facing financial constraints, which are hampered by what I've just described, I think what's important is that our overall appeal remains very strong. We're still the biggest when it comes to reach in South Africa. We are unparalleled. With our 19 radio stations, we are the only ones who offer content in every language in this country, which is very critical. From a news perspective, we still have the biggest newsroom on the African continent, and it caters for South Africans for all walks of life in the languages of their choice. There is no other media house that is able to do what we do as the SABC. So despite all of that, we've managed to maintain that. Even from a general entertainment perspective, if you look at the top 10 performing content, the majority of it actually comes from us. The top 3 is SABC content. Despite the fact that we've been unable to invest in fresh new content in the last couple of years, because content is the biggest cost when it comes to, the industry that we are in. But I think what's important is the fact that despite the significant shifts that we've seen from linear TV, which I think we are all aware of, to OTT platforms, is that we are still very relevant in South African lives. When it comes as well, I was talking now about general entertainment. If you look at this in terms of just the performance, news is we still have the #1 spot. Television, we still actually own 17.9 million of adult South Africans who tune in on a daily basis to watch us. And I think what's important as well, if you look at sport of national interest, we've been able to deliver that from an SABC perspective. Chair, sports is a very expensive exercise. We do understand that as SABC we must deliver the sport, but to acquire those rights, it is probably one of the most expensive content acquisition activities for any broadcaster in the world. It's critical for us to say that, and it's funded straight out of our commercial activities. So even though ICASA can list to say these are the sports of national interest and SABC must actually have that on their television screens, the reality is that they must be bought. And we compete for those rights because the rights holders have to make money out of the sale of those rights in order to stay sustainable. So despite that competition, from an SABC perspective, we've really stayed the course in terms of that. So if you look at our performance, is that despite this pressure, revenues on a year comparison in terms of end of year 2024 have improved from an SABC perspective. We spoke about the outcome of the audit that took place last year, which really has progressed the SABC. We continue to monitor expenditure very closely, and we are really minimizing operational costs. But the reality, Chair, is that at some point, we talk about tightening the belt. At some point, there's no more loops to tighten the belt, because at that point you start then, looking at a downward trajectory. Yeah. It genuinely happens like that. So financially, if you look at it, we've really improved in terms of our predetermined objectives. Our content and platforms in 2023 were sitting at 40%. In 60%, we looked at in 24, we looked at a 60% rate, so an upward trajectory. Our digital platforms, in terms of our objectives, we moved from 14% to 29%. Our overall annual targets, what you're seeing is an upward trajectory. In 2023, we set at a 32% achievement rate. We went into 24 with 52% share. That's a massive 20% growth across those different. From a governance perspective, it stayed consistent, which is at 50%. And then from a human resources perspective as well, it stayed consistent. I'm not going to get into the detail of this because I want the CFO to come in and just talk to some of the key issues. But I think what's important, Chair, is that you're seeing the gains that the organization is making. Despite the challenges that we are facing, we've managed to be able to use certain levers to stay competitive and to be able to really stay true to our mandate, but also stay true to ensuring the financial sustainability, the governance that is very, very critical, and we are here to discuss today in terms of ensuring that we meet those targets and we commit. We have committed towards strengthening our internal controls, and I think that is evidence. Even when the Auditor General was here last week, they did speak to the fact that they are seeing that improvement from an SABC perspective. I'm going to skip the other slides, and I'm going to ask our acting CFO, through you, Deputy Chair, to come in just to take us through the financial management. He's going to talk through the audit outcomes, the IFWE, which is the expenditure side, the analysis of our audit findings, and then we've also got our legal head who is coming through to just, at a high level, just talk through in terms of where we are with the SIU investigations. Thank you.
Good morning, Chair and honorable members. I'm here to just add to what the CEO has given as the context to the performance of the SABC. What one would appreciate is that, especially over the last 3 financial periods, our performance has improved. In the 2024 financial period, we managed to reduce our losses from around 750 million to just under 200 million. And coupled with that financial improvement was the improvement in the audit outcomes, where we obtained our first unqualified audit in over a decade. And that's a testament to not only the financial governance, but the underlying financial controls that the entity has employed. And you'd also appreciate that for an entity that has operations in every province and operates from multiple locations, to have controls that are improving year on year is a testament of the hard work that the team is putting into place. The way issues are ever raised around the risk or the persistent risk around our going concern, which has not yet been fully addressed, and we are aware that there is still some work to be done on that. And part of the issues or the mitigations that we intend or propose will be covered in the later slides and on our way forward. But just to re-emphasize that the issues around ASO, the issues around the funding bill, making it difficult for our advertisers to commit to long-term commitment contracts, does put us in a perpetual position where we are funding long-term capex out of OPEX, and therefore our financial position is always under stress. If you move to the details of the actual audit findings, year on year we have demonstrated commitment to resolving our audit findings, and as at the reporting date, we were at close to 92%, but by the time that we submit our financials for audit, we are confident that all the audit matters would have been addressed. And in addition, we are also confident of our ability to maintain and continue with unqualified audit outcomes. On our fruitless and wasteful expenditure, there has been significant reductions and consistent over time. In the last year, the significant increase that you might note is purely from the interest that accrued on our signal and distribution account with Centec, driven by our inability to settle that account on time. However, through engagements with both National Treasury and the department, we have concluded that the accounting or the recognition of that as a fruitless and wasteful expenditure going forward, it will not be classified as such, because it is expenditure out of liquidity management, not from reckless trading. So if you then look at and take that out of the consideration, of the disclosures, you see that there's a consistent decline in the fruitless and wasteful expenditures incurred. The same theme also for our irregular expenditure, Chair, and it's also the testament to the audit outcomes that we have seen and that have improved over time. From what was around 200 million in 2020 to just under or just around 10 million in 2025 are yet to be audited. And of that 10 million, the majority is of historical contracts. So not only is there a reduction in both incurrence, there's improvement in management of irregular expenditure. We have worked very hard over the years to address consequence management. I know there has been a concern both from the department and the AG that the progress has not been as speedy as they would want to. But it has been a matter of us being diligent and taking our time to make sure that there is due process and care applied in that process. And as we are sitting here, I'm happy to report that we have engaged with the bulk of all historical matters going as far back as 2018 with the National Treasury. So it's something that is receiving attention, and we are nearing the end of the resolution of those matters. So in the next audit cycle, the issue around consequence management, even though it has been delayed, would have significantly improved and have a positive and improved outcome. The rest of the slides, Chair, talk to the details around the management of irregular, and I would just spend a bit more time on the conclusion of material irregularities. First, to bring into context that if you look at the two items that the AG did raise as material irregularities, they were right at the beginning of the application of that framework. Those two matters have been satisfactorily resolved and have been audited and confirmed as such by the AG that they have been resolved. And as management, we are happy with the actions that we have taken. But most importantly, there has been no new incurrence of material irregularities, again, to just show and indicate the theme of improved governance, internal controls within the organization. The rest of the detail, Chair, on irregular and fruitless expenditure, I'll take it as read.
Through you, Chair, then we will then get into the detail of that during the Q&A. We will now move in terms of the SIU matters. Tony?
Thank you, GCO. Good morning, Chair. Good morning, members of the committee. I'll also take it as read and skip the introduction in the interest of time. We have categorized these matters in terms of themes. The first one is contractual matters reviewed and set aside by a court of law. The first one is Lorna Vision. The court has ordered this company to repay an amount of 62 million rand back to the SABC. The matter is still ongoing because when we tried to recover from this company, we discovered that they've changed the address. We have also instituted a process to go against the directors of that company because this company gained from an unlawful contract. The next matter is Infonomics. This company has also been ordered by the Court of Law to repay an amount of 4.5 million rand, which they benefited from an unlawful contract. The next matter is Asante Sana, also ordered to pay back an amount of 19.9 million rand. The matter is still ongoing, and there are also proceedings there against some of the directors. The Mort MacDonald matter, the court ordered that Mort MacDonald must repay a just and equitable amount, and that amount was settled between the parties at an amount of 1.2 million rand. Jaheli versus SABC and Mafuko. Mafuko ordered to declare profits. The latter has appealed the matter, and the matter is still ongoing. Sekela Xabiso, the court did not rule in favor of the SABC. The merits of each case are different and decided on that basis. The SABC has engaged, if you were to go back to that slide, GCO, the SABC has, however, saved an amount of 6% from that matter because the parties engaged, and the matter was settled where the SABC saved about 6% instead of paying 100%. On the SIU versus Rapella, the recovery of amounts. So on this one, we're talking about some of the matters that are still ongoing and some of the matters where the SABC has recovered some of the funds. On the SIU versus Rapella, the recovery of amounts from Rapella due to her approval of Sekela Xabiso, Infonomics, Mutwening as personal legal fees. All of these matters were unlawful, and the cancellation of payee owed to SARS, which resulted in the SABC being penalized by SARS. This matter is still ongoing against Ms. Rapella. The next matter, the matter of George Hlaudi Motweneng and the public protector, recovery of tax costs in the sum of 1.2 million rand in favor of the SIU and SABC. That's what we got there. Motweneng paid a lump sum of 200,000 rand, and the balance is being paid in monthly installments of 50,000 rand. The next matter, SIU versus Magube, the former chairperson of the board during the Hlaudi era. Recovery of amounts from Chizumba, Magube, and Rapella for the success fee of 11 million payment made to Motweneng. These proceedings are being pursued against those former board members. Another matter, SIU versus Motweneng on the legends stroke artists matter. A decision to approve payment to various South African artists was reviewed and set aside. The court ruled that the SABC's right to claim from the artists has prescribed. The SIU appealed, and the court ruled that prescription on a debt arising from an unlawful administrative act can only start running from the unlawful transaction which has been set aside. However, the SIU advised that the SABC, the SIU advised the SABC that the cost-benefit analysis does not warrant the SABC pursuing these claims against each legendary artist. But the biggest gain on this matter is the fact that the court has laid a principle which was not there before to say prescription does not run on an unlawful transaction. It will only start to run after the transaction has been declared unlawful and set aside. The next matter, SIU versus SABC Pension Fund and Motweneng. The Governance and Ethics Committee's decision to award Motweneng's success fee was reviewed and set aside. Motweneng's appeal to the SCA and Concord was dismissed with costs. An amount of 6.4 million rand has been recovered from Motweneng's pension fund. However, an amount of 5.4 million is still outstanding. We are dealing with warrants of execution. The next matter, SIU, SABC, TNA Media. The SABC made an application to have a core partnership between TNA and SABC declared unlawful and to have the contract reviewed and set aside. A joint application for directors of the TNA is being pursued. So there are certain matters where we have not yet received reports from the SIU. These matters include Lezav Consulting, Foxton Communication, a multi-choice contract regarding the sale of SABC archives. We also have a number of matters that are being consolidated because they are relevant. Firstly, we have the Kweyama and others, and the SIU review, Mujaeli matter, and SABC interim board application to set aside SIU report on appointment of Mafuko have been consolidated into one matter. The next matters that have been consolidated are K. Modley and others, and the SIU application to pierce the corporate veil and hold Lorna Vision directors personally liable for SABC losses incurred on the Lorna Vision contract is underway. This is the matter that I mentioned earlier on at the beginning of this presentation, to say on some of these matters, the SABC and the SIU are pursuing the directors of these companies. I think that's the end. Thank you, GCO.
Thank you, Chairperson, members of the Portfolio Committee. That is the end of the presentation from the SABC. At this point, we hand over to yourself for engagements. Thank you.
Thank you very much. We will have a lot of time to refer to different slides you may not have been able to canvass in detail. It's just that that tends to happen 2 or 3 times. And when you've already gone through them, we just never make the time at all. So thank you very much. I think you did remarkably well to still stay within the time. I want to deal with the issue of the Public Finance Management Act and what you say are constraints, commercial constraints that it triggers, so that we can develop an understanding of so do 2 things. One, explain, and the SABC team may assist as well, explain what about the PFMA is a constraint. If you could make use of an example or 2, that would be very useful. And then, because we've got the Deputy Minister here, we can then also have the conversation about, you know, what, if anything, is or can be done about it. But what I wouldn't like us to have is breaches later on as you go, that mean you have to come back here under very difficult circumstances, because the Auditor General would also have been unhappy with you, and then we also become unhappy with you. So if we can just canvass that issue quickly, because I need us to get an understanding thereof.
Thank you, Chair. So maybe just for context, for us, the first point, insofar as the PFMA at a particular point in time when we joined the board, was the issue of supply chain management, insofar as procuring of content, right? We're in this environment that we operate in, there are people that would give us bids, unsolicited bids for content, but the time it would take for us to approve such, we lose the value of that content. So I must comment and say, at that point, there was initiative by the ministry and the DG, and allowed the SABC a grace with National Treasury to say, for purposes of, you can be given grace as to how you apply the supply chain management processes. But I know over and above that, there are still hindrances that makes it difficult for the SABC to work with agility and speed, especially in the markets of especially content procurement, because people, if you think of the content that the SABC, let's say, shows or on TV, the things that they would like to do, people would move to other platforms because it takes us that long to approve. So I'll ask the CEO and her team, because we have Ms. Pumzile, that will go into detail as to how, which hindrances that we do have and how we try to overcome those. CEO?
DC, I think you've touched upon it. Content is one of them, and then I'll ask Tommy to just come in to talk about one of the key things that we are currently doing is looking at partnerships with outside selling houses. So from an SABC perspective, we have a lot of inventory that we sit with, for example, that we have to take to market. So, and there are some limitations in terms of the current prescripts in which we operate, and I'll ask our legal team to come into it. But I'm going to hand over to our head of SCM just to talk more in terms of the constraints that we face, and also I think talk about the current indulgences that we've received from a content acquisition perspective, because we do have one at the moment.
Thank you, Chair. Yes, I think has already been touched. As an organization, we have a very complex way of just doing business, and because, as it has been mentioned, we are mostly a commercial environment, and we compete in a highly competitive environment. So there are certain constraints that we have been experiencing when it comes to the normal PFMA regulations, when it comes to our procurement activities and the regulations that govern that. We have subsequently received some concessions from the National Treasury, but it is not very broad-based for our environment. And we are looking into requesting a broader exemption from the National Treasury to allow us to exercise our rights in terms of procurement outside of the governing structures, to become a bit more agile and a bit more competitive in the environment. You look at things like, having to go out to public, for example, on even very competitive side things of we want to hide probably certain IPs for us to get the best-in-class responses from the market. And the PFMA, as it stands right now, it will compel us to be open on even transactions that we would want to be hidden from some public for us to get the best-in-class responses from the public. But we are currently busy with that exemption motivation as an organization to request for a broader concessions from the PFMA regulation as it stands. In terms of some of the points that has been made, that I would ask legal that they come in on that particular element that we're looking at that is constraining us even from the sales point of view. So you might find there's a sales transactions that we want to buy. It is infused. There's a procurement issue to it, but it has a sales element to it. That currently it is a gap that the PFMA does not give us concessions on that and give us agility. So I'll ask Tommy to give us a practical example, so that at least the committee has an idea of some of the constraints we have when it comes to selling and getting the revenue that we are really driving for. Over to you, Tommy, and then I'll come in if there's any need for me. Thanks.
So, sorry, can I, before Tommy comes, so what I'm worried about is that everything that all of you have just said, if you are not in the broadcast environment, we really have no idea what you're talking about.
Absolutely.
So please start again, all of you.
Okay.
And the reason I said, please make an example is because I want us to understand the nature of the problem in practice. Leave the jargon, please. Okay. All of you.
Thank you, Chair. And that's why I'm saying Tommy maybe can give a practical example.
No, I need someone to describe the problem. Okay. So I need someone to describe the problem and its effect. I think I have a sense, and I was a journalist, and I'm also struggling. So I need you to explain to the committee what about procurement and the PFMA's rules, because there are two sides to it you're explaining. There's a procurement, there's also the sales issue, okay? Start with the procurement. What is the constraint? Give us an example. You don't need to name the entities, but say last year, we wanted to do the following. This is what we had to do. In terms of how the market works, this is how everybody else who does not fall under the PFMA is able to do. They're able to do it faster. They're able to get better. Whatever the case is, please do that. Leave the jargon.
Okay. All right. We should.
All right. Thank you, Chair. Just to get straight to the point, the challenge is when we try to procure a service for the sale of SABC inventory. The challenges emanate from...
What is SABC inventory?
SABC advertising...
Please, simple language.
Yeah, thank you. SABC advertising airtime is known as inventory. So the challenge, by way of example, if there are matters that I'll be free to talk about because they were before the court of law and thus they are public knowledge. If the SABC is approached by an organization like Prime Media, and Prime Media says, SABC, we can see you are struggling to sell your airtime. We have exclusive clients that can buy airtime from you. Can you mandate us or appoint us to go and sell this airtime on your behalf? The challenge then becomes, is that not a procurement of service? If the answer is yes, then Section 217 of the Constitution kicks in. It comes with those 5 principles to say, when an organ of state or a state-owned company wishes to procure goods or services, it must do it through a process that is transparent, efficient, and so forth, right? So when the SABC tries to compete in the market, the SABC finds...
Can I ask you to start a bit earlier? So I know what you're talking about.
Yes.
And you are also starting it a little bit late. So let me try, and if I'm wrong, please switch off your mic. So if I'm wrong, please explain it to me. So there are agents, alternately commercial entities, which have exclusive rights with commercial entities that would buy advertising space on SABC. Would that be correct?
That would be correct.
That would be correct.
Yes.
So in other words, company A, a big retail company A, has an exclusive agreement with the agent as a middle person, right? That agent basically can work with those clients in order to secure you potential advertising revenue from those.
That's correct.
That would be correct.
Yes.
Now, the PFMA says you can't simply say to those guys, sure, go and get me that advertising revenue. You have to put out a tender. For people who don't have these exclusive agreements with those entities, which means they're not going to get it in any case. And you then, first of all, there is a process of tendering, which takes its own time and adjudication. The second is you then end up with an entity that does not have these exclusive arrangements in any event. Let's say, and I'm not saying this company, let's say a ShopRite group, which is massive across the estate, right? Radio, television, etc. So if you can't get inside that environment, then you've got a problem because you've now potentially lost the revenue, both in terms of the time you couldn't enter into an agreement because of your procurement, and secondly, you just may not be able to eventually get the opportunity in any case. Is that what you are describing here?
That's what I'm describing.
Sorry, that's what you're describing.
Yes.
Okay, that's one example. Okay, yes. Carry on.
Yes. So, and in that regard, your first challenge is the law, Section 217 of the Constitution and the PFMA, right? The second challenge is the other interested parties who may challenge your transaction. If you go ahead and conclude such a transaction with an organization like Prime Media, in the example that I gave you, you would have other interested parties like Kagiso Media who would launch an agent application to interdict that transaction, and they will take you to court for that matter. You are then unable to go ahead and conclude those kind of transactions.
Okay, can I then ask you to describe the same problem from the client side? I don't want to do it myself because I've been a client, so in my professional life. Can you describe the same? Because at least in my experience is that the entity itself will not do the buying on its own. So in other words, the advertiser will not do the buying on its own. It will hire an agent to do it on its behalf. So the SABC or whoever, or multi-choice, never really get to, well, never is a big word, but in the normal course, they speak to the agent who does the work on behalf of the commercial entity. Would that be correct?
That will be correct. And
right. So how do these two intersect for you?
So you see, even the advertiser would be relying on the expertise of this media agency. The media agency will be saying to the advertiser, there is, this number of audiences at the SABC. Your product, if it were to get exposure to these numbers, you will get value for money. You will get mileage, right? And these advertisers rely on the advice of their media agencies. Hence, they appoint them to give them advice and also, spread the portfolio across all multimedia platforms.
Okay, so I need you to finally resolve one thing because I need to get back to the court case, right?
Okay, all right.
Which is the kind of thing that ends up with the committee. So,
yes.
Is it that a media buying agency acting on behalf of a bank would also draw fees from the SABC? In other words, would they double dip?
Not necessarily. In the past, it was like that, but things changed around 2018. The acting CFO has got more knowledge on that. But the agency would only draw the commission from the advertiser, not from the SABC. Because here, in that scenario, you are talking about the agency that is proactively approaching the SABC. The scenario that we are talking about is the SABC identifying media agencies that have a portfolio of good clients that may be brought to the SABC by that media agency.
Okay, I see. So, CEO?
If I can come in as well, Chair. So what has happened is that there's the traditional model, which is what you're referencing, where traditionally an advertising agency X would have this number of clients, they develop the media strategy for them, they do the buying for them and the execution for them, meaning they make sure that the stuff goes on whatever advertising platform that they're buying. And then the commissions then are structured with the client, to Tommy's point, where there's an agreement between agency X and client A that this is how much we pay you, either it's a retainer per month or it's a percentage of spend. So that's the traditional model that has always existed. But what has happened in the last couple of years, you find that there's now free agents. So what happens with the free agents is that you're in a situation where, unfortunately, you are not in the consideration set for traditional agencies because they are already committed to certain media owners. That's where the competition exists. If you look at that slide that I had in terms of the time continuum, especially with the proliferation of digital agencies, they changed how buying is done. Because what happens now is that it's instead of the other way around, where the agencies used to come to us, we find that we now let ones who must go to the agency to actually get the business. So if you're going to sit at Auckland Park and think that the agency is coming to you to say, here's the media plan, I want to buy, it doesn't work like that anymore. When we started our careers, that's how it worked. But it doesn't. SABC must now go to fetch the revenue, otherwise you are not on the plan. It's that simple. So that's how it works now. It's irrespective of the fact that you've got 26 million people who tune in every day. That's irrelevant. That's literally, it's a pricing game. It's other things that the advertisers are now looking at, even the agencies themselves, in terms of their own personal interests. So what happens is that you now have these free agencies where you go and you say, Agency X, I have been trying for the last 5 years to sell to these a cohort of clients. Can you please go to those clients and sell for me? Your salespeople have been unable to open those doors. They've been knocking. There's no revenue coming. But those people, most of them, you find that they used to work either at other agencies or they used to be on the media side, but for client. So they are able then to go and sell you specifically to the clients. So, so that's how it's working. And therefore the deal, to what he's talking about, is that then the revenue deal is now, you are now paying for that service. Unlike, previously, where it was the client who was paying the media agency, the commission structures, the in terms of the monthly retainers, etc. So that's, the model has changed. So that's literally what has happened, is that now, NOMSA is saying, I want to hire this agency to go and sell on my behalf because my salespeople have tried. We've lost this money. The last time this person advertised is 3 years ago. But I can see that every year they're spending 150 million rand on everybody except us. I just want to get 50 million rand. But it's this person who can open up the door. For that person to do that, it means I must pay them. So I'm now the one who's now paying that revenue based on the business they bring me. So that's how it's changed. So, Chair, that's just a part of it. And then there's the other part, which currently we do have the concession, which is the acquisition of the content. But it's not a long-term concession. And we want it to be a long-term, to Tommy's point, in terms of just expanding. I think it was actually Pumzile to say expanding. What happens in content, Chair, ideas and creativity cannot be an RFP. Somebody wakes up and has a massive idea for a new TV show. I can't write as an RFP that speaks to that because it's actually their creative IP. We are not creatives. We need to remember that. They are the creatives. So what those guys do is that they come up with these massive ideas that are really groundbreaking from a content perspective, and they pitch those ideas to everybody. And it's about agility and really ensuring that you sign off the idea. From an SABC perspective, to what was described in terms of ICM processes, we can't compete in that. And it's become worse, Chair. Previously, it used to be either people go to multi-choice or go to e-media or SABC. And in fact, before, SABC used to go and have the annual, request for content. Imagine, that's how it used to happen. It's not like that anymore. So what has happened now is that this content, they're no longer only pitching it to us, they're pitching it to OTT streaming platforms that have the money to buy. So whilst we are saying, we need to write this RFP, it's gone. And that's what we're asking for, to say we need that agility so that when this idea comes, that's going to give us 260 episodes for a telenovela and 300 million rand in revenue. We need to be able to have that agility to compete. Thanks, Chair.
All right, thank you very much. I think we've got a sense of the problem from both sides. I don't want us to get too distracted by it. The reason I canvassed it is because it speaks to potential areas of non-compliance, right? So that's important that we all get it. So what you're describing is potentially a situation where somebody's got a YouTube channel, they've got a segment or whatever, which is doing fantastically well. And you want to bring it onto your platform because they already have 1 million viewers for it anyway. When they bring it onto your platform, you can also make money off it and also fulfill your mandate. The PFMA says you can't go to that person and just acquire it. You have to send out an RFP so that other people can replicate it. Is that it? But it's that person's idea. His or her idea. Okay, no, I get it. So this is not what fundamentally today is about, but what we'll do, we'll deal with the historical issues, because at the end of all of these meetings, we end up with things that an accountability dashboard for all of us, right? So this area needs to be cleaned up so that it is compliant, at the same time you're able to do what you need to do. So that's important. Otherwise, I don't want us to sit here next year and we're shouting at each other over things that have happened that shouldn't have happened. Right? So I think it's well understood.
Can you hear me? And the huge economic impact it has generally on the creative industry, especially from the developmental what to call perspective, and the economic imperatives that the country is what to call is pursuing. And SABC stand a better chance to activate that space to a bigger benefit than it is now. SABC being unable to participate because of these what to call.
No, you have. So honorable members, let us do this. So we've got 3 members with different focus areas who are going to do the initial questioning. So my view is that we do 1 member and then we take a break and we come back, we do the 2 and the follow-up questions. Sorry, honorable member.
Thank you very much, Chair. Good morning to the colleagues and everyone. No, I just wanted clarity as well, Chair, before we go, because yes, we understand and we hear the plea, and it makes perfect sense. But my worry is the risks. They didn't go to the risks because the culture of these kinds of transactions end up with favorites. So I just want to check, have they done their risk analysis on this particular plan they want to pitch, so that when we meet Treasury, we also hear what are the analysis in terms of risk. Because we don't want to end up with favorites. Thank you.
Yeah, please go ahead. That's a fair question.
Thank you, Chair. So from our side, we have, I'll say insofar as highlighting of the risks, I'll ask the CEO to come in. And I know perhaps the audit chair will also want to come in because this has been dealt with in detail just recently. CEO.
Good morning, everyone. Good morning, honorable members, and good morning, Chair. I'm sorry that I agreed to you last. To the point that you are making, we are mindful of the potential risks. In fact, they are real. They're not just potential. But with the first round, when we did seek a way to deal with the restrictions that come with PFMA processes, we did put in place measures to deal with what you are mentioning. We did have safeguards, but to the extent that we are seeking more, yes, we are going to have to tighten more because we were able to manage in the period that we were given on the leeway that was allowed. But we know the risks that are involved, and the Audit and Risk Committee is actually dealing with such. And in fact, even with the time we were given previously, when we were allowed, we were able to manage that. But we know exactly what you're pointing out as required safeguards to deal with that. Okay.
All right, so, and this is a very important, thanks, Honorable Member. It's a very important question. So one of the things we will then do, and I don't know where this is going to end up, but we always try and assist where we can within lawful parameters. One of the things that would be useful would be understanding what your minimum standards are, even for consideration to be onboarded onto the platform. That's important. If you don't meet these 5 criteria, we don't even look at you, or at least in the initial engagement, we assess. That's what I would expect, that there is an assessment made. The second, as one of those assessments I would imagine, is does it fit in with your general mandate as a public broadcaster, for instance, and you know, economic inclusiveness, etc., all of these wonderful things. And then the process internally to make sure that this problem of favorites, where, you know, when I start my YouTube channel, I've already spoken to my mate there, and I know that 12 months later we'll have a conversation. You know how it goes, right? So you don't need to set all of that out here, but those kind of things would give the committee the comfort that, you know, if this process is done in the right way. All right, so thank you. So our prosecutors today, we've got 3 prosecutors today. We're going to deal with the audit outcomes themselves first, and Honourable Bill, I think you're dealing with those. So what we'll do is, so we divide our work. We look after many organizations. So we divide our works. So what we'll do is, Honorable Bila will ask you questions. It will be an interactive session, a sort of session between you, and then the members will ask any follow-up questions, and we'll take a break. And then when we come back from break, we will then do the next. So the clock has started ticking now. Thank you.
Thank you, Honorable Chairperson. Good morning to the Deputy Minister, the team from SABC, colleagues, Abshen. Thank you so much once again. Let me take this opportunity and welcome the presentation that has been made for us here. Honorable Chairperson, according to AG SA on SABC's 2023-2024 annual performance information, there are no material findings. However, several key targets were not met. These include some of the service delivery and operational targets. In some instances, we found that only 2 out of 16 planned targets have been achieved. And it has been noted by AGSA that the SABC is struggling in achieving its performance targets. What could be the root causes of SABC's failure to meet several key performance targets in 2023-2024 financial year? Are there any measures or remedial measures that have been put in place to address this shortfall? If yes, how is the progress being monitored to ensure improved performance? To what extent do the current performance targets align with the corporation's available resources and strategic priorities? And how realistic and achievable are those plans? I think I will pause here, get answers, then I will be able to continue. Thank you, Chair.
Thank you, Chair. Chair and Honorable Bila. Thank you for that question. So maybe in a nutshell, I'll just start off by saying most of the targets, I'll touch on the ones that are related, especially to IT expenditure. You'll note that we'll plan for 16 targets, let's say, for website and related issues, because at a particular point in time, we were under the impression that we're going to make X amount of money from the deals that from our projections. However, most of the targets in those that have not been met have been mainly due to financial constraints, right? And and the financial constraints of the SABC. SABC knows, I think the CEO tried to explain it even before, even basic things, Honorable Chair, such as, let's say, maintenance of the building. Those things will be planned, like fixing the lifts and all those related issues, but SABC will not have the funds to do that. So what happens is, because we have the massive debt, I'll first start off that we have with Centec. So we almost like, what happens, the CFO and the CEO and the team, they look, they say, okay, we start with Centec, that's the biggest thing that we have to do. What are the most critical things that we have to deliver moving forward? Then they'll say, oh, from IT, the most important thing is SABC Plus, right? So all the other things will take secondary, it's secondary in terms of actioning them because they require financial resources. So it is the SABC throughout, you would see all the things that have not been achieved. It's not lack of due care, it's not of lack of planning. We have planned, we had set targets even to say how much we're expecting to make, but we just couldn't reach the targets that we had planned for ourselves. As a result, in the main, that has been the reason. And we did, even with the AG, demonstrated our will to actually action those targets that we have planned for ourselves, because those were necessary targets. It was not nice to have. So I'm not sure at this particular point, Chair, do I go to the detail of each and every one? So, or what can I, through you, Chair?
I think you can go in detail for the questions that I have already asked so that I can be able to continue based on what you responded.
Thank you, ma'am. I'll hand over to you, Bakat.
Thank you, Honourable Member. I think largely, as the DC has just said, most of what we have not been able to deal with relates to funding requirements. They may look like practical things that we should have been able to address, but fundamentally it boils down to how you resource them in terms of the skills that are required and in terms of the funding that's required to achieve those targets. But in most cases, it boils down to that. So where the point that was being made about setting targets, for instance, for the websites, and we end up not achieving or achieving far less than we had planned, it's the skills that are required that required funding for us to be able to resource the projects themselves. So it always comes back to the same problem that we are facing, which is a major issue around the funding of the entity. Yeah.
Perhaps because those are the ones that we can think of on top of our head, maybe we can just further unpack the question, Member Bila, that we can go to those specifics, because those are the ones that we know top of head, that we even are responded to in the financial year 2023-2024. So maybe further detail, with your permission, Chair.
Yeah, please go ahead.
Okay.
Through you, Chair. So we in the presentation, and I did skip it. We've put in a very detailed performance against our predetermined objectives, and I think that's what the member is referencing. I'm struggling with presenting again over there, but I'll just go through it because there are specific questions that you've asked. I think, obviously, from an SABC perspective, we have different pillars in which we structure our performance. And the biggest focus tends to be from a revenue perspective. A lot of the time when and that's just financial sustainability is just the one pillar that we've got. And then we've got the rest of the pillars. And if you may just indulge me, Chair, just to go through them. And I think just if I go to the top, we all know, I'm not going to talk through the revenue, because I'm certain that we'll deep dive into it and the CFO will also come into it. I think what's important as well is that when I get into one of the key performances in terms of our screen ratings, which is a very critical one of the key things is that the reality comes back to what we're talking about, is that the output indicator is your share of prime time. Television. Primetime television is where, as broadcasters, that's where we focus in terms of the majority of our revenue income. So what happened is that our annual target was 22% for SABC 1. We achieved 18.8%. For SABC 2, it was 6%. We achieved 4.1%. For S3, it was 3%, and we only achieved 1.5%. And the reality is that it's because we lacked the fresh new content in order to attract those audiences. And that's because we didn't have the capital to invest in acquisition of that fresh content. And the type of performance you're seeing is actually very strong performance if you think about just the breadth of the new content that has been taken to market by our competitors. It means that our historical content still continues to perform very well for us. So you find that that's where the biggest investment is going in. So, we've also, what we've done as well to stay afloat is that we've gone back into our archives where we've digitized some of that content, and we've brought it back into both SABC Plus, our OTT streaming platform, and our linear channels, and we've seen that it's performing very well. So we've got a strategy that we've put into place. We've put a strong marketing team into place in order to assist us in marketing to those audiences that's going to translate into that revenue that we require. So for us, Chair, what we talk about is that we say there's a virtuous cycle when it comes to our industry. How the virtuous cycle works is that you need audiences. You need audiences to attract advertisers. But to attract audiences, you need content. But to attract content, you need money. So that's the cycle. First, you have to have the money to buy the content, to bring in the audiences, to bring in the advertisers, and hence the virtuous cycle. Currently, we actually say SABC is in a vicious cycle because we don't have the cornerstone of driving that cycle. And hence you are seeing some of the performance that really speaks to the overall non-performance when it came to some of those predetermined objectives. And then the chair then spoke to, I think, the one that was also not delivered was the issue of digitization. That really, and I think the exciting news is in the previous year, if you look, I think the annual target was obviously 16. And what the most important thing is that we were planning on developing websites and actually commissioning them during the year under review. Unfortunately, the planned websites, were developed, but they were not commissioned, quite a lot of them. So that's where we really failed in order of that annual target. And at the same time, I know that department, when we've had these discussions, they've often said to us, therefore, as SABC, you need to set realistic targets, taking into consideration your financial constraints. And it's something that we've taken into this new financial year that we're going to be reporting in. But I think what's important is that we had those financial constraints. We did not deliver on those projects, but we actually put them forward into this year under review that we will be coming back to speak to. And we're proud to say that, in fact, quite a lot of them were executed. You've seen the performance of SABC Plus, Chair. It was one of those that we didn't deliver on in terms of our targets last year. We announced a week ago that we've reached 1 million subscribers. So you've seen that we've actually put into place measures to mitigate against the lack of performance previously. Thanks, Chair.
Thank you so much for the response. I heard you saying this happened due to financial constraints. I just want to check what led to the unavailability of financial resources which were originally allocated for these digital projects. And in the absence of outsourcing model, will the internal resources have capacity and capability to deliver critical digital transformation projects? Thank you.
The Chair, through you. So what I'll do, I'll ask the COO who was instrumental insofar as the targets being now having been achieved as of now, just to go historically. Thanks, COO.
Thank you very much, Deputy Chair of the SABC Board. Good morning, Chairperson of the committee. Good morning to the members of the committee. Good morning to the Deputy Minister. Good morning to the Director General, as well as all my colleagues from the SABC and everyone here. Thank you very much, Member, for that question. So when it comes to the internal capacity to digitize or even digitalize the SABC services, we do actually rely on external parties or external service providers. So for instance, now we're busy with the legacy content to digitize the entire historical, formats of the SABC that came with the analog formats of the past. So we're using a company from outside, not just outside. Sorry. So we're working with external service providers where we're busy with the digitization project of the legacy material that is sitting within the archives as well as the libraries of the SABC. So without them, internally, we don't have those resources. But what we do on the other services, like the development of the websites, the development of the mobile applications, because all the radio stations, they need to have their own websites, they need to have their own mobile applications, and then we aggregate all of them on SABC Plus, which is our flagship streaming platform. So we do once in a while have those, resources internally, but not all the time. So not the entire website or mobile application development, teams internally. Then when it comes to the playout systems, as in the systems that we use to play out the content, whether it's on radio or on television, we also are working with the external service providers. So we've kind of concluded all of that. But what happens is that when the service has been, procured and then commissioned, we then get an internal team to be able then to look after that. We call that the level 1 services. But if then they can't resolve the issues, then they escalate that onto the external service providers. So internally, we do have very limited capacity to be able to continue with the digitization journey. But we do support most of the products that has been commissioned internally. But from a funding perspective, I think it's a very critical question that maybe we need to just talk to. So when the CEO was talking, she was referring to the entire vicious cycle. Without a lot of capital expenditure, we won't have, fresh content. And without fresh content, we don't have audiences. And then that leads on to the advertisers or our clients, and then the advertising revenue that goes with that. So as things stand, we struggled with CapEx, both for content as well as for technology. And that has led to us not to, be able to commission most of the programs that we'd like to. But some of the programs, we actually are trying to, using our own internal resources in the form of operational expenditure. But it's still not enough for us to be able to recover, from the positions that we are at. Lastly, for instance, the recent month, where we introduced fresh new content on SABC 1 at 18:30, a show called Amalanga Wafana, we started to see a lot of, audiences coming back to the SABC. And the target that is here, even though we're not reporting on that right now, is actually so much improved, simply because of the fresh new content that came through. So that is by far our currency as a broadcaster. Thank you very much, Chair.
Thank you. The next question is on the number of SABC TV programs in the free-to-air FTA. Linear top 20 that fell from this target of 13 to 9. So I want to check what is your plan to produce or acquire more competitive content to meet this target?
Thanks, Madam Pilar. I'm going to ask the CEO just to first, Chair, with your permission, to contextualize where and how the SABC funds its content and how we're trying to get around that, and then go to the specifics on the channel questions that have been asked. Thank you, CEO.
Thank you, Chair. Thank you, Honorable Pilar, for the question. Currently and historically as well, is that SABC, when it acquires content, it always used to acquire it at 100% ownership, which is a very archaic model of acquisition of content. And that only happens if, like I said earlier, if you're in a monopoly in the market. But now you are dealing with the likes of Netflix. If you wake up, when you look at Netflix, Honorable, you know that there are there's content there that says Netflix original. You've seen it. And the majority of that content does not say Netflix original. They go and license it and use all sorts of other acquisition models. For it. So currently all of SABC's content is acquired based on the proceeds of revenue from our commercial activities. So our advertising income is what enables us to acquire content. So when you look at it, this industry is in the attention economy. So all of us compete on content. So what has happened is that because we've been unable to bring fresh new content, you find that in terms of our performance, we've dropped. Like I said, if you look at the top 5, the content that's there is your traditional SABC content. It's Uzalo, it's Skim Sam, it's Generations. We haven't really introduced any massive new telenovela in the last couple of years, whilst our competitors introduce something every month. And therefore, that's why we've dropped, because people try new content, and therefore, you don't have the eyeballs that you used to have when they do that. And that's literally why we've dropped. But what are we doing to mitigate against that? Because that's what's important in this discussion. What we've done is that we've reviewed our policies, because the world has changed. 100% ownership is no longer what's relevant. We've looked at opportunities to license content. So you'll see that we've got third-party agreements. We've got what we call the BBC block that exists on SABC. We've also got other agreements with Prime Media Studios, and we're looking at other producers in terms of co-productions with them. We've recently just concluded an agreement with another third party where we're going to be co-producing a telenovela with them, and what we're going to do there, look at, is a windowing system where literally, BBC has done it for a very long time, where some of the best content on ITV is BBC content. They actually co-produce it. ITV gets to broadcast it first. It goes through a windowing opportunity where the BBC realizes revenue from that, and then finally it comes through to their platforms for those audiences to view. So we are also looking at that for the SABC, where we are saying the times of 100% ownership are dead. We are going to be working within the creative industry, the creative economy, working with producers, creators, and coming up with funding models for that. We are also looking at development funding, institutions to assist us with acquiring of content. And there's one specific agreement that is very far down the line that we will be announcing very soon as well. So that's what we're doing. And to our COO's point, in the last 2 weeks, we've now launched a new telenovela called Amalanga Wafani on the 27th of May. As I sit here today, it is now in the top 10 of South African programming. It's performing extremely well. So that's what we're looking at. We're recognizing that last year we didn't hit those targets, but we've literally reinvented ourselves and come up with an innovative way to acquire this content, because to believe that we by ourselves are going to be able to do it, we're not. We always say there's co-opeters, there's co-opetition now. So we compete, but we collaborate. So we are able to go to our competition and say to them, that such content that you've got has a lot of interest on our platforms, and we strike a deal where after they've exhausted their own platforms, at some point it comes through to SABC for us to actually leverage for our audiences. So that's what we're doing. So what you're looking at last year, it was traditional, SABC must own everything. But going forward, we've changed it so that we are able to then to compete effectively in that top 10. Because if you are not in that top 10, you are unable to actually make revenue out of your audiences. Thank you.
Last round. Your clock will be up.
Okay, yes, I just wanted to check if I still have time.
I'm giving you an indulgence now.
No, thanks, Chair. Last two questions that I have. One, despite a 3.2 billion bailout in 2019, which was tied to a turnaround strategy, SABC's financial position has not improved significantly. What lessons have been learned from the unsuccessful turnaround strategy? And how will the revised revenue plan ensure sustainable financial growth? The last one, the implementation of the new scheduling system and the operational news production system were not achieved, Chairperson. I want to check what caused these delays and what is the revised timeline for completion. Thank you so much for the airtime.
Please repeat the second question. Is there a question? Mike, yeah.
The implementation of the new scheduling system and the operational news production system were not achieved. What caused these delays? And what is the revised timeline for completion? Thank you.
Thank you, Chair. Honorable Bella as well for that question. Perhaps the first one on the bailout, I said it in this way in terms of responses. At the time that the SABC requested a bailout from government, because I was still in government at the time, they requested for 68.8 billion rands. And then due to approval processes and other things, they had to revise it down and request 3.2, which SABC really appreciate. So at the time when the SABC got the bailout, they had a business plan turnaround that had 6 strategic pillars. And at the core of the strategic pillars was the issue of management, of paying all the debts that it owed, settling historical debts that were there, and some of them I think are the ones that you would have seen, that some of the court cases that SIU has referred to. So most of the money went there. That's the first thing. The second part that the SABC had to undergo was to do an internal human resource capacity exercise, which included issues such as letting go of people, reskilling people for the new digital era that we have. The third one that was the most critical was to say it was the digital arm of the SABC. And the SABC, because it still is mostly analog, had to ensure that it moves from the 1976 kind of thinking to the 21st century kind of thinking. That was hugely underfunded from a planning point of view because technology changes each and every day. So from meeting the targets, the SABC has been for the years that it had the bailout, had, I say, monthly meetings with the Department of Commerce and National Treasury just to demonstrate how it has utilized the bailout funds. And what has, like, for instance, acquiring of new content. There is content, for instance, that was acquired because at the time, I know that this thing played on SABC 3, I just keep forgetting the name. It had horses, the estate, it had the estate, right? This content, there's a big boa about the estate. But unfortunately, the issue of content is a game of something may work, something may not work. So SABC had utilized the bailout funds and ensured that it's audited for what it was intended to be spent on, right? And once that was done, we had now to say, okay, because we know it was insufficient, how do we move to the next leg? So there are a couple of things that we have been requesting from government, such as the CEO has spoken to the issue of talking to other funders out there. We would seek things such as give us guarantees, right? Because no funder is going to give you money with the kind of balance sheets that we have. And our major shareholder, our only shareholder, apologies, is government. So the lessons, when you're saying what lessons we have learned, being honest with you, because the space that we're in keeps on evolving. The lessons, I say for me, had the SABC invested earlier insofar as the digital space and not assumed its dominance, maybe things could have changed. But we see elsewhere globally that all other public broadcasters are struggling with keeping up with the changes that are happening in the digital space. It goes from the content that we discussed earlier, from news to making sure you have the latest, I'll say, whatever application that you may have, be it TikTok or whatever. And as a result, the type of investment for digital could have been made earlier. That's the thing. And the amount that was done at that particular point of the bailout was very minimal. Being honest with you, it was just patching what was happening, like OB vans outside broadcasting. If you've seen those vans outside, it's called OB. It was extremely low, the amount that was there, because SABC just had so many people that it did not pay, and it needed content. So those are the things. So I'll ask Mr. Binza to talk to this issue, the one of the news. To go into detail, because he knows what's going on there. Thank you, Chair, Madam Bill.
Thank you, Deputy Chair of the SABC Board. And thank you, Honourable Member, for that question. So the electronic news production system, which we call ENPS, has been fully implemented. It's the news system that our 24-hour news channel uses today, and it's functional. That also includes the newsroom production system as well. That also has been implemented fully. What happened or what caused the delays, it was more around the internal capacity, and also the fact that we were working with an external vendor that had to come into the country every now and then just to check if everything is going according to plan. And that now, I can confirm, is concluded and has been implemented quite successfully. The second one on the scheduling and advertising management system, we call it SAMS. This is by far the most critical system at the SABC. It's the revenue system. So if you lose 1 cent of that revenue in that system, it's a cent too much. So what we do is that when we're replacing then the old one, we run the other one in parallel. And then we call that the embedment period. That system has been running in parallel now for radio for the last 3 months, and the reconciliations are getting to 99%. And on the 1st of June, the scheduling and advertising management system for radio will go live. And then we're busy with television on the side as well. We've done the implementation already on the sport channel as well as on the Lihaya channels. But what will happen from June and July will go on SABC 1 and then SABC 2 and then SABC 3, and then we go to news and education, and then we conclude the project. The target is the 31st of July, 2025, would be the final implementation of the scheduling and advertising management system. Thank you very much, Chair.
Sorry, Chair, through you, I will ask the CAO to respond to that question properly, as asked by Honorable Billa, and to advise the SCOPA of the status quo as things stand, so that we don't find ourselves being asked the same question next year. Through you, Chair. I thank you.
Thank you, Deputy Chair. I think the issue of the landmark system is a good question, Honourable. The SABC acquired a new scheduling system, and I know the chair of the committee will say to me, I must speak English, and so that people understand. So what is in the industry is that we have a system that schedules all our advertising, and that's literally where what we say the sales execution, the fulfillment happens. People buy, people buy. And then an operations team then takes those plans and basically schedules all the advertising across the SABC ecosystem. That's radio, that's TV, that's now the OTT streaming platform. So it was decided to actually move from the current system to a new system that was acquired, because the current system was not updated to be fit for purpose going forward for our new requirements. You know, one of the key things that has happened in the last couple of years is that media buying has become algorithmic, you know. So meaning that also what you can do is that instead of having somebody who's sitting at SABC planning, is that the agency can actually do it themselves. You give them access to your system.